Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Welcome everybody. Let's take a look at the stock market today for the S&P E-mini S&P 500 futures for Wednesday, December 15th. Okay. The new session's already started right there. So we're looking at this big, huge green candlestick, okay, which ended at, let's see, 4702.5. Obviously a huge day, 103.75 range. Yeah, big, huge day. Easy money to be made on a day like that, guys. Easy money. Okay, so we've got this, whipsaw thing going on. They've chop, chop, chop. 2 days down. Not quite touching the 50. Then a huge 103, almost 104 day range up. Back and forth. And, this. Okay, if it breaks all-time new highs, great. Okay, we'll trade that too. But for right now, there's the top, and approximately there's the bottom. Okay, there's definitely some sign of strength here. When you see this kind of thing like that curls back up like that, often that's a sign of strength. There are some divergence warnings here, but let's see, where did they come in at? Well, okay, interesting. Yeah, I don't give them a lot of credence, so I'm not going to pay attention to those divergence warnings. I don't think they're anything significant. So there's some sign of strength here, definitely. And there's a little bit of gap starting to go on that MACD. So we could break the all-time new highs, but I'm not convinced of that yet. It's got to prove it. It's really as simple as that. We can talk about the old ATH. Let me tell you something what I know right now, guys. You see this right here? This is going to go away soon. Okay? We may hit all-time new highs. To the moon, Alice. Whenever. Okay, sure, it could easily happen. And then you won't hear about ATH for many, many years to come. I guarantee it. So get used to not hearing about this, because it's going away. It may not be now, 6 months, year, whatever, but that right there is going bye-bye. Okay? Just a matter of time. And I don't mean somewhere in the future, 5-10 years, it'll happen. You know how these people who never, they're afraid to even make any decision about anything on any kind of short time frame. No, I'm talking about in less than a year, ATH won't be talked about again. Goodbye. All right. So until this thing proves that it's going to go to all-time highs, we're in this. We're right here. We're in this kind of sideways channel. That's what's going on. It's more like right there. And this, like I said, this candlestick right here has a really good chance of popping to all-time new highs. We'll see. But it's got to prove it. I'm not convinced. Look at this one. Which is, though that's typical when you come out of a low, you stall and get going sideways. Then that. Okay. That's not typical. It's not always typical to get that all the way back down to the 50. Okay. So we'll let the market do what it does. I'm not going to sit here and predict that tomorrow's going to do this or tomorrow's going to do that, because I don't have to. And it doesn't matter, because all of it's tradable. This candlestick was hugely tradable. Those two red ones were tradable. Obviously today was massively tradable. Now for swing traders, it's not really. Okay, intraday, heck yeah. A lot of money's been made in this time frame right here for intraday traders. Now for swing traders, if you were to ask me my opinion, because that's what we're doing here, we're talking about opinion, I would say don't touch it. Don't touch the market. It's not a swing trader's market. It's a trader's market. Okay, hourly chart for the members. What can you say, guys? What the heck is that right there? That's called OOJ! That's freaking OOJ! 62 almost in range. Okay? So whoever was trading intraday today, okay, if all you do was looking at the hourly chart, as soon as this candlestick right here, this one, this big huge one, as soon as it got to that level right there, let's zoom in. Let's get into the party on this. Let's do this together. Let me tell you how you trade this. Okay? All right, so this is the hourly chart. Don't forget, look at the hourly chart. That big candlestick right there was 2 o'clock Texas time here in the United States of America. Okay. So you can go ahead and figure out your own time zone, okay? It shouldn't be that hard. You're just going to see a huge monster candlestick on your chart, on the hourly chart, okay? Wherever time zone you're in the world, okay? So how would I trade this? It's really super simple. All this time throughout the day, which on the futures market started way over here, okay? That was the first hour last night at the futures market opened up right there, okay? I would not have traded any of this nonsense long. We're below the 50. A lot of you that know me know that I keep my rules simple. If we're below the 50, I'm trading short. If we're above the 50, I'm trading long. That's just a general rule. Sometimes I break it depending on what's going on, okay? So for you new members that don't know, that's how I do it. Okay, you might want to adopt that. It's very straightforward approach. It saves you a lot of heartache. Yeah, you may miss on some opportunities, but the opportunities you do get, you usually make good money. Okay, so don't sweat about the ones you miss. Just rejoice in the ones that you get. Okay, so I wouldn't trade most of this. I might trade a few of those red ones. I probably would have traded that one. Okay, and we'll get into that later because we're talking about this big bad boy right here, this one. How would I have known to trade that? How would I have gotten entry? Well, guess what? As this momentum started going up, and I probably would have been looking at the 5-minute chart on a separate screen at the same time. And I would have noticed on the 5-minute chart that it was well above its own 50. Every chart, this is the hourly, but imagine this being a 5-minute chart, okay? And it would look similar to this, but instead you'd have the 50 like here, and the 5-minute would probably be, it would be either really close or far away or whatever. It doesn't matter, okay? The point is, it would have a different look to it, okay? So you use the shorter time frame to help you out with the longer time frame, okay? But on the 5-minute, what we would have noticed is that the candlesticks on the 5-minute would have gone way above the 50 for the 5-minute. So if that's the 50, the 5-minute chart would have been like this. You'd have been the candlestick way up here. And that would have been your clue that something's going on. It would have been on this candlestick here. You'd have been saying, oh my gosh, the 5-minute chart's on fire. Okay? But you still don't enter the trade. You could if you're uber intraday and you're trading the 5-minute. I know some even trade the 1 minute on the Discord server. Okay? But just stick with me on this. Okay? So here's what I would have done. I would have looked at the 5-minute and I would have probably resisted the temptation to trade it for a while. Okay? And I would have waited until this candlestick right here got where? It got above that wick right there. From that point on, which we don't need to get into the exact range. We know the range was about 62. So whatever, this is probably about 3/4 or maybe a little more. So you would have got, whatever, 40, 50 points worth of range. Okay. Sorry, that's the wrong way. That way. Okay. You would have got 40 or 50 range. Super simple way to trade. Super simple. That's how simple that was. That's all you do. Okay? And of course, you have your risk management in place and your stop losses. And here's the thing. On this kind of candlestick, trailing stop for you beginner traders who are struggling to make profit. You put your trailing stop as soon as this bad boy started getting up and above this line. And give yourself some room on the trail. Don't make it too tight. And you just would have made money. Now, it may have stopped out up and down as it's going through here. Okay? But so what? I talked about this so many times. What if you made $100 today? What if you made $100 today? And that's all you made? It was a good day. If it was 200. If it was 3, 4, 5, whatever. Whatever your account size, this is going to grow, okay? If you have big accounts, then this dollar amount will grow because you're going to trade in proportion to your account. For small accounts, how can you not be happy with $100 a day? Just be happy. Times 5 days a week. Oh my gosh, that's $500. Okay? So just be realistic with your trading. This was a huge opportunity today. No reason not to trade it. Okay, I'm not even going to look at the 5-minute chart because it's so silly at this point, you don't need to. Let's move on to crude oil. Crude oil, even that hourly chart, was a monster day. I can already tell it was a monster day for products. I just know it. I don't even have to look. Okay, crude oil. That's the new session that just started, so ignore it. We're looking at this one. Okay, what was the range? 2.27. A decent day. It wasn't one of these kind of days. Okay. But it was a decent day. It wasn't as good as that one right there. Or even as good as that one. Okay. But it was a decent day. There's no reason not to make money in this candlestick. Okay. Now, here's the deal. This would be aggressive trading in my opinion because you're well below the 50-day. We're on the daily chart. That's the 50-day moving average, and you're well below it. So obviously this candlestick you'd be trading long because it's green. The whole day was, most of the day was green. Or at least I should say a good portion of the candlestick was green. I don't know if most of the day was. We'll see that when we get to the hourly chart. Okay, so that's a bit aggressive. It's a bit aggressive to trade this candlestick long when you're this far below the 50. Okay, but if you felt compelled to do so, okay, the hourly and 5-minute chart would help you do that. Okay, for swing traders, heck no, no touchy. Don't, that's me slapping my hand. Don't touch. For swing traders, don't be stupid. Okay, I shouldn't have said stupid. Be smart. So let's stay positive here. Be smart. Okay. Now, there is one thing that swing traders may point out is that this is beginning to go positive, and there's some truth in that, but this is looking a bit sketchy. Okay, so you got to be really careful for swing traders. I would not, in my opinion, trade long just far below the 50. It's dangerous. Don't do that. Okay, there are other opportunities. Okay, you would want to be trading short if you're going to trade this. Okay, but right now it's a bit risky because you got indications of things going up. Okay, that's where the market's at. Okay, you got to respect the market. Okay, let's look at the monthly, weekly, and then we'll look at the hourly. Not much has changed here. Strong month. Okay. But indicators are weak. And for December, we have a divergence warning going on both indicators, and that usually means something's up. Okay. So at the end of December, which we're getting there, guys, right? We're starting to get there. Christmas is just around the corner. It's older than New Year's Day. Okay. And if these little dots are still there, that's something we need to pay attention to. And that would mean that most likely the MACD would begin to pinch down. Okay, let's look at the weekly. Okay. Wow, monster mash on crude oil, guys. I think this is temporary. I think this, whatever this is, could be wrong. Looks temporary to me. The MACD is telling us watch out below. And until these things do like take off and really absolutely go way up here, then for now this looks, even though we got a big green candlestick there last week, I'm not convinced. This looks weak to me. Let's look at the hourly. Okay, so just speaking about today. Today started there, okay, and that would all be tradable. Every one of those candlesticks is tradable. And why do we know that? Because the daily is below the 50. Remember I talked about you don't trade long below the 50, you trade short? Well, there you go. Okay. So maybe you swing traders who are working day jobs and taking care of kids. I know it's tough. You got to attend to the kids and the wife, and there's chores and there's all kinds of other stuff, helping kids do homework. I get it. You don't have a lot of spare time, okay? So maybe you can't be up late because you got to get up in the morning and go work, okay? But if you do happen to be up, okay, and you see this going on, you could trade that for maybe 2 or 3 hours, okay? Okay, so you could do that. Obviously, I'd be talking to people who are international. Okay, domestic USA, this is going to be anywhere from like 3 or 4 in the afternoon in California, all the way to like 6 p.m. on the East Coast, New York, Florida, you know, that kind of. All right, so US can trade this easy when the market opens up because, you know, it's still fairly early enough to do it. Okay. All right. So obviously over in Europe, it's going to be probably pretty late when that happens. And, you know, I think whatever, 7-hour difference, whatever it is, 8 hours difference, 9 hours, depending on where you're at. All right. But so that's what that's what I was talking about earlier. Okay. We're below the 50 on the daily. So on the hourly chart, you'd be trading the red candlesticks. You're trading that. Okay. You're just trading it. Okay, you're not trading that, and I wouldn't trade any of this. And this is a risky trade. Okay, even though that candlestick right there is a really good candlestick to trade long. Okay, for obvious reasons. It's above the 50-hour, and especially once it gets above that upper wick, you can take advantage of that right there, that entire candlestick up to that point. Okay, That's end of day kind of stuff. I think that's probably around whatever, second to the last hour of the intraday session. Okay, but you could trade if you wanted to. But I don't, in my opinion, like trading long when you're below the 50 on the daily. Okay, but you could do it in that scenario right there. Okay, let's move on to gold. And remember, guys and gals, for crude oil, you can trade MCL. Okay, listen, for you guys and gals who are members, premium members, and you don't have a futures account, try to get one if you can. Okay, I know that some people that are international in Europe, it's hard for some of you to get access to futures. I think some of you are trading Interactive Brokers or whatever your brokerage is over there. Okay, and I think they're trying to get brokers. I guess it depends on the exchange you're on and whatever. But you know, if you can get futures, get the futures account. If you're domestic USA, doggone it, man, do what you can to open up a futures account. Do it already. Okay, so that would be E-micro crude oil, and since we're looking at gold, it's the same thing. MGC, really good for small accounts, or even large accounts that don't want to take on big positions. Super affordable. Okay, so let's take a look at gold here on the daily. Okay, daily chart, 50's right there. This just, you know, chopping sideways below the 50. So gold is, you know, weak. Chopping below the 50. Again, same rule. Don't trade it long. You're looking for short opportunities like that day back there. You don't, I mean, this day was partially tradable because there was a lower wick here, so part of that day was tradable. Part of that candlestick right there on that day was red. At some point, it was red. Okay, for sure it was a red candlestick. Okay, so you could trade that when it was red, especially below that lower wick right there. Okay. This is the new day right there, so ignore that one. Okay, but I wouldn't have traded. Okay, I'm sorry. Hold on one second, guys. Yeah, my bad. So today, my bad. This is today's candlestick right there. Some of that day was tradable below that lower wick. So from about right there on down, you could trade all that. Okay. You could do that. And then there's some part of the day, I don't know, because we have to look at the hourly, but some part of the day was split, right? Some of it was green, some of it was red. Okay. So again, general rule, you're below the 50-day, you're looking for short opportunities, not longs. And by the way, for those that don't know, because some people don't know this, futures, it's the same margin, long or short. It's the same, it doesn't matter. It's not like equity stocks. Okay, super affordable. Easy to trade in either direction. That's why I love futures. Super easy. Brokers don't care, futures trade either way. Okay. All right, let's take a look before I switch over to the weekly. Let's look at, ignore this yellow one. Or, okay, hang on a second. I need to find out, okay, maybe it is the yellow one. I need to, okay, let me back out here a little bit. I need to look at this. I need to look at these cycle patterns for a second. Give me a moment here. Okay, so the green ones are daily. Sorry about the yellow ones, those are hourly. So the green ones here are the daily. Okay. Look at that, guys. Sure enough, even though it's a green candlestick, look at that. It came right down into that cycle low. Look at that candlestick, guys. What a thing of beauty. Right down into the cycle low. Okay. So even though, look at this, it's amazing. Even though gold's been weak and chopping sideways, we are now moving upward out of this cycle low. So we're going to wait to see. Gold's got to prove itself. Okay. We may get a price increase going up into hitting up into that 50 over the next few days, week or two. But there's so much downward pressure on the other futures products out to like Christmas Day area that it may keep gold down for the time being. Okay, but just understand that this is a cycle that's moving upward. Okay, and the short-term indicators are showing that, and the MACD is trying to get involved. Okay, so be aware gold may have some upward price. Okay, isn't that amazing? Look at that candlestick right on the cycle low. Absolutely amazing. This cycle, by the way, ends when? January 25th, guys. Okay. Pause the video, keep track of it, make notes. January 25th, way over here, would be the next cycle low for gold. Okay. All right. Let's take a look at the monthly for gold. Let me zoom in a little bit here. That's what I see. I mean, it just sticks out. I've been talking about this every day. It just sticks out. Okay, that's what I see. I see that. It's the monthly chart, by the way. So this is very long-term stuff. Okay, down into the base of the triangle, up into the top of the triangle, down to the base of the triangle, up to the top of the triangle. Guess where we're going? Everybody, come on. Everybody help me out with this. Where are we going? We know where we're going. The chances are high we're going this away. Okay? On the monthly. Remember, that's long term, looking way out into the future. Okay? Okay, so where does that put us? I'm just going to kind of guess at this. 1670 out in February. There you go. Now you know. There you go. Now you know. 1670. Write it down. Make a note. Maybe it's going to be March or April. I see high 1600s in spring. Okay, you options traders, there you go. High 1600s in the spring. Late winter, early spring, mid-spring, whatever. That's where gold looks like it's going if this continues. Don't you just love charting? All right. That monthly looks weak. Look at that MACD. Oh my gosh. Okay, let's look at the weekly. What's going on over here? What is happening? Okay. Usually, just as typical, the MACD is absolutely flatlined on the weekly chart. Still weakness going on here on the weekly chart. It's below the 50, tracking along this 50. Okay. Nothing to talk about there. Let's look at the hourly. You guys are holding me up, man. I'm trying to get to this video, but I know you all want to know this information, so we're just gonna keep trucking along. Look at that. Here it started. This was the session we're talking about. Started right there, and finished right there, all the way over there. Okay, that's the session. Okay, since gold is weak, we trade from that candlestick all the way down. That's what we do. Okay, that's how you do that. And then when you get to this candlestick right here, when it got below the lower wick of that one, you trade that whole lower wick. At that time, it wasn't a lower wick, right? It was a big old red body. You traded it. Okay, that's what you did. And then as it made its way back up in here somewhere, and maybe it happened to the very okay at some point, obviously it traced back up. You stopped out. Okay, what was the range on the candlestick? 8.8. What a nice, beautiful candlestick. A lot of money making on that candlestick. Okay, and guess what you do with this one? As soon as that halfway down stuff, that one's a little harder to trade because the lower wick here is a little bit intimidating on this previous candlestick. A little bit harder to trade that one. Okay, that one was easy to trade. Okay, and then you don't touch this nonsense, and you don't touch that nonsense. Okay, below this lower wick, you could trade that. Okay. The hourly at the moment looks pretty strong. It looks like it's gangbusting. Okay, so we'll watch gold. Gold looks very strong in the hourly right now. Very strong. That is like huge. It's above the 50-hour too, so if this thing starts getting some legs under it, this gold could do something short term. Okay, let's move over to natural gas. Okay. And that was today right there. I don't think it's really very tradable. I don't even think it's tradable intraday. I mean, kind of a little bit. What was the range? Pretty small range, 0.16. So, just not really tradable right now. Okay, just kind of chucking sideways way below the 50. A lot of damage, as they say, was done to natural gas, right? So, trying to make something happen, but it just looks flatlining right now. Don't think it's tradable. Intraday or swing trade. I wouldn't touch natural gas right now. Okay, so we already covered this. We already know what we're going to look at here. The Monster Mash. Still looks huge weak. Weekly. I mean weak, not weekly. Monthly chart, but it looks weak. Still looks weak here. Okay, the weekly chart. Okay. Sitting on the 50. I'd like to say short this, but the daily action just, you can't. The candlesticks are small and tracking sideways. You can't even do that. But on the weekly chart, it looks like it wants to break below the 50 and just continue down, right? But these other indicators are getting pretty far down here, guys. So wouldn't be surprised to see a little bounce coming up pretty soon on natural gas. I think it could happen. But long term, that is just like, oh. Okay, let's go look at the hourly. See, now that's tradable. That, and that. Those 3 candlesticks. Especially those 2. Tradable. The session started over here and ended over here. So you can't trade any of that. You can't trade that. I wouldn't trade long. Really tough to trade chop. Okay, there really wasn't much to trade there on natural gas today. Intraday, you could trade that one, and that would be like the only 2 times I would trade it today. So kind of tough to trade natural gas simply because it's just tracking sideways. Okay, let's take a look at wheat. Wow. Oh my goodness. See, now wheat, unlike a lot of other products, or unlike natural gas, you should say, is very tradable. Just look at this thing. Okay, it wasn't really highly tradable here, and here, but all up in here it was, and today it was huge trading day. Look at this. How can you not trade it short? Right? Monster day. As soon as this thing got below the 50 and got below that lower wick right there, guys, so from that point on, it was game on. I know a lot of people don't trade wheat. I don't know why people don't trade this product. This made people wealthy, this move, guys. Everybody's stuck on the indexes. I don't know why people don't trade wheat. Huge moneymaker. Let's look at the monthly. Man, December looks short side monster. Still a long ways away above the 50. But when we get to oats, we're going to see that too looks like something's coming. December's not over yet. We got divergence warnings popping up here. It could change. If this candlestick were to retract and kind of go back more than halfway back up and get really almost like a doji or something, okay, then we would see that these divergence warnings would disappear. But for right now, they're still in play. And on the monthly, wheat looks like it's ready. It looks like it's heading towards something to the downside. This is just begging to cross over. Begging to cross over. Huge. Lots of money made in the last 3 weeks. Just absolutely monster. From 863 down to 756. More than 100 points worth of movement. Ooch. That's ooch. That's big money trading. Let's look at the hourly. Yeah, I mean, there was no. I didn't even have to look at this hourly chart. Just today's daily candlestick was enough. And even if today's candlestick in wheat was so easy to trade, even if you didn't look at the hourly, you made a lot of money. Okay, we know that wheat on the weekly chart and the daily chart, all of it looks weak. So there's no reason to wait. You just trade the red ones. Anything below the 50 hour, just trade it. When this thing got to there, just trade it. Okay, that candlestick. Traded this one. Sure, there's a little give back because of the wicks, right? There's going to be a little bit of stopping out, but so what? There was so much money made in 1, 2, 3, 4 candlesticks today. Oh my gosh, I wish somebody would just say, yes, I traded wheat and made a bunch of money. All right, let's go look at oats. Which, by the way, I hold 1 contract on oats. Oats loves to mess with me. Look at oats. Look at this. It continues to defy gravity. 779. It's given up 68 points since over here. Sitting right on the 50. Doggone. How does it defy it? Now we're getting a little bouncy off the 50-day. Not really a bounce, riding along it. Just riding right on top of that 50. Craziness. For the moment, on the daily, oats still looks weak, but it's a rising 50. And never forget that rising 50 or declining 50. You got to pay attention. Catches a lot of people out. Let's look at the monthly. Little doji. My little doji. Giddy up, little doji. All right, so this is looking down. This is down. We got this huge thing here that says we're not done going up. What is that? Yep, divergence warning back in November, one in December. Again, just like I said about gold, if this stays here when December is done, that's going to carry some weight. And I believe it'll mean more price decline if it's still there. Okay. November's got it. Okay, look at this. We haven't seen it in ages. Looking good. Okay, let's look at the weekly. Yeah. Wants to cross over. Wants to do it. Hasn't done it. Bunch of divergence warnings. These guys, I mean, what do you say? This one's already got a gap up going on. Okay. Got a cycle low. We're almost right at it. Though Oats doesn't have very good cycles. That's 1219. But you can't dispute it's come down. It's even though Oats doesn't have very good cycles, it still came down into this. Amazing. So we could get a bounce here. Could happen. Okay. I'm right around break even. I'm actually, I don't know on the position. I'm actually a little bit down. So I may have to stop out on this if things start getting away from me. But for now, I'll hold on to it. Wow. Looks like it wants to cross over, but it may not do it. For now, these indicators are still above their lower line. Okay. The Big Daddy not by much. So I'll pay attention to that. I don't normally look at the hourly for Oats because it's really thinly traded. Not really something I wouldn't trade this product as an intraday product. But it's okay if you do plan on taking a swing trade on this for better entry. You can look at the hourly, you know. Guys and gals, oh, one more thing before I say goodbye for the day. ARLP, that's a coal stock. Yes, I own quite a few shares on it. And no, I'm not trying to pump it to get people to join in so I can get out. It's got nothing to do with it. Just real quick, why do I like it? First of all, well, you know what? Let's go look at it. Why talk about it? Let's just look at it. Let's look at it together. Let's look at it together. Let's go to the daily. Why do I like ARLP? Should be obvious. MACD starting to roll up. These guys are going to the moon. Okay, look at this. Right up to the 50. Last 3 days. Bam! Today was a huge day. Look at that. Yesterday too. Okay. Now, will it hit resistance of the 50 and get rejected? We'll have to wait to see. Okay. Hard to tell right now. But while the indexes have been doing this, look at this stock's been doing. Okay. Yeah. So this, it's pretty strong right now. And I think back here was a 20-cent dividend. Everybody see that right there? 20-cent dividend, guys. They had a 44 cents earning. This was back, whatever day that was. That was, okay, it's not telling me for sure. Let me get over here. Yeah, 10/25, October 25th, okay? And the dividends was paid out on 11/4. So December, January, February, they would pay out first week of February, okay? And what I think could possibly happen is if they have another good quarter, which I can't imagine why they wouldn't, but they might not. But I think they're going to have a good report coming up in February, okay? Or it might be like late January. And then I think the first week of February, I'm hoping that they do a 40-cent dividend. Hey, maybe it's 30 cents. Maybe we crush it and get a 50-center because they've been known to do that, okay? Well, hopefully a 40 or 50, right? But even if they just do like a 30-cent, you would actually, you could borrow on margin and beat margin. You would beat the interest on most margin accounts. So that's why I like it, because I think they're on the verge of potentially going up, increasing their dividend. We'll have to see. There's no guarantee they will, but I like this play. I'm going to hold on to the stock. I also think, just real quick, the lifetime average for the stock is like $15 to $20. So it may not get back up to those. And that's just the average, not the high. Okay. So I like this stock. Just thought I'd mention it. I'm not trying to pump it or dump it, anything like that. Okay. Also, be aware, premium members, I put the fixed income channel on the Discord server. I put a couple bonds in there I thought they're a little bit on the risky side, but I thought they're a good risk. Again, my opinion only. Yes, I hold positions on those bonds I put in on the fixed income channel on the Discord server. Okay. That's it for now, guys. Talk to you all real soon again next time.